So now we're going to shift gears and we're going to look ahead instead of looking back. No one can predict the future, of course, but our forecast presentations give us an important sense of what's coming down the road. So now we're going to hear from the first of our segment presenters, Steve Hewins of Hospitality Maine, with Maine's vacation and hospitality forecasts. Steve, will you please join us to kick off the forecast portion of the event?
Yeah, let's see, got it. Good morning, everyone. Very glad to be here today, talk about the dynamic and growing hospitality industry in Maine. It's quite a bit happening and not a lot of time to deliver the messages today, so I'm going to take some time. There's our agenda, but I'm going to focus really on the takeaways that I think are important that you leave with today. The full presentation that we did is available to you all as guests, as attendees. So you can look at that deeper, and feel free to check back with me at Steve at Hospitality Maine if you want a deeper dive in any of this information. So, start by a little bit of a lesson. These are the hardcore data that we track in hospitality, specifically on hotels. This is from STR, Smith Travel Reports, which is the leading authority on trends in hotels and other parts of hospitality. We look at three things: occupancy rate. This is all math equations. Occupancy is basically the rooms occupied divided by the total number of rooms available for sale. Average daily rate is a number. It's the room revenue divided by rooms sold. And then revenue per available room, RevPAR, which is the most important factor, which is the revenue based on available rooms. So it's basically telling you what a hotel is really earning in terms of its revenue per room. So that's an important factor. So we'll start with the national lodging perspective, give you a sense of that. This is an interesting slide because it kind of shows a flattening out over the last 4 or 5 years. And this is really a function, not so much of demand, but of hotel build-outs. The hotel industry has grown dramatically. You'll see that in Maine as well, but nationally as well. And those numbers are flattening out. Basically, we're absorbing the growth into the occupancy rate, which is roughly at 2/3 occupancy. So it's fairly strong. You can see this. Most of this data begins 10 years ago, back at the end of the Great Recession. So similarly, here's the average daily rate. And this shows you what I'm saying. The average daily rate is on a steady rise since 2009. Mainly a function of demand and how the hotel industry is very strong across the United States right now. Similarly, RevPAR is also in a growth pattern. I think it's showing, $85 is an average room rate revenue per room nationally. So that's a number to keep in mind for when you look at Maine, which I'm going to do now. So the Maine data I've overlaid against the national data to give you some sense of the scope of Maine's performance. You can see here that we trail in occupancy, and we'll always trail in occupancy, primarily because of seasonality. That's such a factor in Maine, particularly in certain parts of the coast and obviously areas up north, and not so much as much in the city of Portland, which I'll get to in a second, but in many of the resort areas, it's a seasonal issue. So it's always going to show up a little bit less, where it may be 100% in July and August. It's going to show up as 20 or 30% in the winter season. This is an interesting slide because this is evidence of demand. This is what I was saying. Demand for Maine is strong and continuing strong. You can see it in the Department of Tourism numbers, but specifically you can see this here as it relates to hotels. We are ahead of the national average in terms of average daily rates. So people will pay more to come to Maine. It shows up in this number. A little bit in this number. This is the RevPAR. Notice the trending. We were pretty close right after the recession. There was a gap in a few years, but it's now starting to narrow again. In 2018, the average daily rate, the average RevPAR was almost the same, just $2 less than the national average, and that's another strong sign of demand. So now I'm going to break out into 4 segments that we track with STR. STR basically can only track 4 sections in Maine because there's not enough hotels that report data to STR. Remember, STR is a voluntary report data coming from hotels. So unless hotels submit data, they don't have statistically valid data in some parts of Maine, but they do in 4 sections, and these are the ones I'm going to report on right now, starting with Maine, North, and Bangor. So this is an area of the state that not only includes the metropolis of Bangor, but also areas that are north and around the city primarily, not the coast. The numbers there are the weakest pretty of the four, but still strong. You can see from 2017 changes, the percentage change in all three of those metrics is significant, is positive. I'm not going to read all the bullets that I put down there, some of the factors, but certainly there's a deeper dive into all of those things if you would like. The Mid-Coast, I would say, from my perspective, is a bit of a disappointment in the sense that it's still positive, but you notice the daily rate is flat. The occupancy is okay, as is RevPAR, but some parts of the Mid-Coast surprisingly struggle with tourism. Particularly places like, not so much Bar Harbor, but when you get into the real mid-coast areas, some of the peninsulas and some of the smaller places struggle at some times during the year, even when they're open, and they are seasonal in many places. To give you a little more perspective on that, I got a short video here to show you from Patrick Morgan, who's the president of Witham Hotels, and maybe we can run that video.
In 2018, we had successes on a few different levels. We've had a plan over the next few years to reinvest in our properties. We've been profitable in the short term, and we're looking to put money back into the portfolio. And we did make some significant investments in 2018 that worked out. We'll carry those over into 2019. Another success in 2018 was a steady increase in ADR and revenue. And we're looking forward to that trend to continue as well. Always, we're going to have a problem on Mount Desert Island with getting sufficient labor. So that's always a challenge. In 2018, it was a challenge that we did quite well with, actually, but as always, that is their primary challenge, and of course we'll be looking into that as something that we're going to make sure we address successfully in 2019 as well.
Morgan speaks to workforce, which I'll speak to in just a second. It's a big problem in places like Bar Harbor, where this company right here is actually buying up B&Bs just to house employees. So, give you an idea, and I think the growth that's going to happen in Ellsworth primarily is going to be driven by the need for workforce down on Mount Desert Island, including the Jackson Lab. So York County, I would label York County the biggest success story in the state, especially in terms of double-digit RevPAR. I mean, 15.2% year over year, that's gigantic, and that is totally driven by travel coming into the South Coast and not venturing further than the South Coast. Obviously the beaches, eastern Massachusetts, New Hampshire, Canadian tourism, which there was a belief that Canadian tourism, because of the dollar exchange rate and maybe even Trump policies, might be inhibited. That we did not see that this year at all. I mean, I will tell you, if you talk to the hotels in Old Orchard Beach, no problem. So I think that's a really important thing. Another factor there is the seasonality is starting to expand. Many of the hotels in places like Ogunquit and Kennebunkport and Kittery that used to close around Columbus Day are now staying open, and some of them even up to Christmas, and so starting early, essentially, maybe in April, weekends and things like that. Again, driven by demand and the fact that perhaps the weather's a little more calm there and it's closer. So. Got another expert to talk to you here. This is Allison Cavaretta from the Meadowmere Resort in Ogunquit to talk about what she sees on the ground.
So Ogunquit's pretty far south in the state, and that southern area really did well in terms of lodging for 2018. Both ADR and occupancy were healthy and strong, and it extended really well into Q4. So we saw a really good year. And that allows for reinvestment, and so it was a great year to be an operator. You watched your costs, and you watched yourself have a great season, and it gives you some time to really put something back into your product and aim at a really great 2019 and hopefully repeat that. Strengths in 2018 is actually something that's been around since 2017, is the continuing of constricted workforce. So it's very difficult to expand your business with the limited amount of resources there are to draw from a labor pool this far south in the state. And that also is showing up in terms of real estate inventory for housing. What's located near where the jobs are makes it difficult to find employee housing and therefore to find employees. So we've got a mix going on there that's constraining our ability to grow. But with some creative solutions, we could probably figure that out and continue along and do okay.
Allison speaks to something that's a huge issue in the resort areas. It's workforce housing. Surprisingly, there are people that can't work there because they don't have a place to live. She's also an expert on H-2B and J-1 foreign workers. They import a lot of people because they don't have a place to house domestic Maine workers, so they tend to import them. And that's not cheap, by the way, just to dispel a notion about cheap foreign labor. Foreign temporary work is very expensive. Because you have to pay them prevailing wage, number one, by federal law, but you also got to bring these people here, find a place for them to live. I mean, it adds up. I don't know if the all-out rate is per hour, but I bet it's quite a bit more than the Maine worker if they could have hired those people, which they cannot. So now we get to Greater Portland. The most non-seasonal market in the state. Obviously, it's a year-round market. Very few places closed during the winter in Greater Portland. The numbers are, across the board healthy, including the, average daily rate at $154 on an annual basis. As many of you know, that rises in downtown Portland to about $400 a night in the summertime and September and October. One of the most expensive hotel markets in the nation, by the way, on a par with Washington, D.C. and San Francisco during those months. Surprisingly, if you talk to hoteliers, and we're going to hear from one in a second here, weekends are all of a sudden becoming very busy in Portland especially. Weekends now in January, full. Mostly people leaving Eastern Massachusetts. I grew up on Cape Cod, and when I was young, people came to Cape Cod for the weekend. They're coming to Maine now, and Portland specifically, for reasons that we all know. So I'm going to let an expert, Gerard Kalajian, who's been in this market for a number of years, give you his perspective on that.
So this year, 2018, was very successful for hotels in Portland from what we see. The trends were very strong. The demand was very high. People were booking a little more in advance, which allows us to be able to have better forecast and push rates a little bit higher this season. And of course, we have a new hotel that joined the market, so we saw a little bit of decline on the STAR report towards the end of the year, which is expected as you get new supply and new hotel entering the market. We see a little bit of a blip in the radar, but we don't expect it to be a very big blip. It'll just be a small portion where the market will adjust, the new hotel will get situated. And looking ahead, 2019 is still looking strong. Demand is strong. We're looking at our booking pace is similar to last year. We're looking some good groups and leisure travel. So the market's looking healthy for hotels in Portland for 2019. We did. The biggest challenge we've had is staffing. It's been the issue for the last couple of years, and the challenges began with the H-2B visa process being disrupted from the previous routine a couple of years ago, and we found that staffing has been a challenge. In addition to that, we're finding that the housing market is very tight. Rental market's very difficult in downtown Portland, so we're having to rent apartments for our staff. So we're turning into the landlord business, being able to rent apartments, so when we bring in the H-2B staff, J-1 staff, they have a place to stay. They've been very difficult finding housing. I think every time a hotel opens up, we'll have a little bit of an impact. The market has to adjust for the new hotel. Looking at the trends for 2019 and 2020, we still feel that the market is going to be strong, barred nothing changes in the economy or any big surprises. We still see Portland being a strong market because we're not only popular nationally, we're also a drive market. So when you're seeing the economy starting to slow down, being a drive market to a big feeder market like Boston, New York, and everything in between, we feel that we still have a little bit of time before we feel a major downturn in the hotels.
Yeah, so Gerard gave us a lot of good data there. He echoed, like the other two speakers did, about the workforce issues, the need for housing, the demand being strong. And he also talked about the absorption factor in Portland, the fact that we, as surprised as people seem to feel, we have not maxed out on hotel opportunities in the city. And there are factors that could improve that, like a convention center or that sort of thing. But from the standpoint of, the demand, it's still strong, and he sees it and is not necessarily fearing new hotels in the long term. I want to give you a quick overview of the hospitality industry in Maine as a whole. Numbers of lodging properties, numbers of eating establishments. Hospitality Maine is an association of restaurants and hotels, but the spectrum is incredibly diverse. Everything from Dunkin' Donuts and McDonald's to 555 and 4th Street. On the hotel side, it's the smallest B&Bs down the coast to this hotel or the Westin, the biggest. So we run everything. This is the scope of the industry. This is the performance of the industry in Maine. This is the trend. This is the actual data. It's hard data from the Maine Revenue Service. So this is based on sales tax receipts for restaurants and hotels, specifically just them. You can see it's going to top out at just about $4 billion this year. Again, this is hard data, unassailable, because it's, unless you're flouting the law and not paying your taxes, I suppose there's that. But other than that, these are the real numbers. You can see that trend since '09 is straight up over the last 10 years, indicative of what we're talking about here. I will say one other thing before I move on. The industry itself, we commissioned the University of Maine at Orono to do a study last fall. Dr. Todd Gabe from the School of Economics there ran a study to prove out what the hospitality sector was in Maine, because it's never been defined before. But the sector itself is restaurants and hotels, and then everything that supports restaurant and hotels. That sector represents $6.5 billion in annual economic output, and 1 in 10 Maine jobs are in the hospitality industry in the state. It's the number 2 sector behind healthcare. It's to many of the public, it's somewhat invisible in that sector. I mean, people think of it in terms of tourism and go out to restaurants, go out to eat and this and that thing. But when you build it into the economy, it's the tip of the spear for economic development, in my view. And I think it needs to be recognized by the people in this room, as well as policymakers in Augusta for that same reason, and we're on that. I could do a whole seminar on the current trends. Obviously, this is all important stuff. Everything I've got here is something to take note of. But just for the sake of today, I would focus on the fourth one down? Yeah. So the fourth one down talks about hotels being less reliant on F&B as they used to be, because local restaurants are an attractor. And in Portland, it's driving the tourism industry, number 1. Restaurants driving visitation. Okay? People are coming here simply to eat. But that's true across the state. It's not just Maine. It's a part of the brand now. So, wherever you go in Maine, food, farm to table, sea to table, that's the price of entry. Beyond that, it's how do you execute. And so we're seeing that in restaurants across the state of all sizes and scopes. But you can see the other trends, again, quite important in terms of where things are going. So my partners at Daigle Properties came up with some of the most recent transactions, and if you have more questions about some of this, certainly you can contact them. Much of it's public information, but you can see there's active market in hotels transactions, buying and selling. Some of the properties that have gone recently are some well-known places, and branded properties too. Some of them are sort of the beach places, like in Kennebunk Port, Old Orchard, going at fairly high per unit rates. Some more further up the coast. I think the market's pretty active. I mean, there's a lot of people getting older, looking to leave the stage and looking for new buyers. We see that in the B&B world quite a bit now, but definitely in other major properties across the state, successful ones. A little bit about the pipeline. Two properties, the AC Hotel right down the street on Commercial Street opened up earlier this year. Home to Suites out by the mall. Those properties opened recently in July of this year. The other ones in the pipeline, some of them are not quite named yet, but these are all legitimately in the pipeline. They're in the planning process. They're in the approval process. These are, you can see some of them like the Aloft Hotel, another Marriott brand another one. Marriott brand, I think it's a Marriott brand. I shouldn't say that. Now I know there's so many brands. I mean, Marriott itself has about 17 brands, but that's a trend. The West Elm's another one. There are things that are not here because they're not real yet, but I am certainly aware, and as many of you may be, there are other hotel projects in this state, even in Portland. One of which got scuttled the other day, which is the waterfront property, the Bateman property down on Commercial Street, primarily a result of the waterfront coalition deeming that to be not a proper use for that site. So in the remaining time, quickly, a couple things. There are local hot topics you should be aware of. Again, I could do a whole seminar on any one of these things, but I would say Keep an eye on the short-term rental business, Airbnb and others. Just note that, because the opportunity to run unlicensed hotels is coming to an end. And by that, I mean hotels that are not occupied, or properties that are not occupied being bought by investors, 3-unit buildings that won't have an owner-occupier in it, and just rent them out through Airbnb. Great business to be in, frankly. It's going to be on the wane. Local, across the country and in Maine, Portland, South Portland being 2 good examples, they're regulating at the local level against that. Owner-occupied Airbnb's so far fine, and probably should be fine, because that's the original premise behind that whole concept. The workforce shortage, we've talked about it. Right now, there are 4,000 unfilled positions in the state of Maine in the hospitality industry, as we stand right now. That's that's from the UMaine study that we commissioned in the fall. 4,000 jobs unfilled. It's resulting in hotels shorting hours, restaurants shorting hours as well. So, local option taxes, 12 bills in the legislature out of 2,000 are focusing on that. Watch that as well as this folds itself out. I'll move on here because I'm out of time. I'll just do the quick forecast just so you know. Last year, occupancy-wise, we predicted that it would be flat. National projections, we predicted flat. It was up 2.6%. Maine, almost 1%. On the ADR, we predicted up 2 to 3%. Maine, 6.65%, 3.5% in the nation. It's better to miss low than high. RevPAR, 2 to 3% growth. Maine, 5.65%. Nationally, 2.39%. So Maine with a bullet on all 3 of those. And here's what we're looking at for this year, 2019. I think occupancy is going to stay flat, 2/3. It's probably going to remain around there, which is fine. We'll absorb new properties. The average daily rate should rise almost 2.5%. Same thing with the RevPAR. So looking for a pretty solid 2019, like Gerard said, abject of any catastrophes in the economy or any of that sort of thing. So right now it's all looking good. That's all the time I have. Thank you all very much. Thank you. Yeah, sure, go ahead.
Thank you, Steve. So I have one quick question for Steve. I know the hospitality industry, we talked a lot about workforce shortage. And in the past, we've seen a lot of foreign workers with H-1B visas coming in to support the industry, oftentimes from other countries or maybe in the southern hemisphere. Do you have any, can you talk about that for a minute and how that has impacted the market?
The market, yeah. Yeah, well, I can. I mean, I briefly mentioned it, but Maine employs about 10,000 foreign workers every year. J1s are foreign students, okay? So they come in through the State Department on visas to study. They're like our own kids in college. Summer jobs, come to America, work in hotels and restaurants. H-2Bs are real temporary workers that are hospitality people, and many of them come back year after year. In fact, some places, 20 years, the same people have been coming back from Jamaica or Romania or name the country, Southern Hemisphere, as you say, Caribbean, and that sort of thing. But they're being held back they're being wrapped up in the immigration issue in Washington, because these are not immigrants. These are like foreign temps. They want to go home. So they're wrapped up in that whole controversy over immigration. Therefore, Homeland Security controls foreign temporary workers, and they put an artificial limit on it. And I will just tell you one thing. If you wanted to get a foreign temp for this summer, forget it. Not a chance. You had to apply at 12:03 seconds, January 1, when they opened up the thing. I mean, they crashed the system at Homeland Security. They had to restart it a week later because everybody tried to apply. So I wish we had the workers in Maine to fill those jobs. We're doing something about it. We're building a hospitality apprenticeship program, try to take high school kids and bring them into the industry, make careers out of being in this industry. We're just starting that right now, so we'll hopefully have an impact this year. But as we said, it's a big potential cap on the industry in Maine. It's very important. Thanks for the question. Okay.
Thank you, Steve.